Welcome at forextrading.com. Let's talk about the part of the strategy which is called let it run. Well, this part of the strategy is described in many ebooks, many technical analysis books. Many of important people trading mention this as the basic part of technical analysis, basic part of risk and profit management. Well, here we got 4 hour chart with euro dollar, of course, and what we are seeing here is look at those buyers coming in here. Look at this wave. We can't really see from this part starting, we can't really see any real sellers coming into the market and keep it for a while. I'm meaning this this candle, for example, those candles here, they are beautiful. They look like sellers coming in, but there is no coming through with those sellers. There's no real action after this. So this is just a one-time deal when the market is confused, and it happened again here. And you see this example, for example, many insignificant candles. So it is not like this situation here or something we see here when the candles are very strong, red candles, very big, long, and they're coming through with some continuation and still going down. This example, for example, we see buyers coming in. Very strong move. After some hesitation into the market, buyers came in and they keep it for a while. Well, this part of the move is the uptrend, which is really growing most of the time. But we see some moments like here when the sellers are coming in. Let's take a look at the different smaller 30-minute time frame. You see like 1, 2, 3 candles that the sellers came in the period of hour and a half, and they didn't really take this profit from here, or nobody came into the market seriously buying some contracts, and so the markets did some continuation pattern, which is seen as a flag. A flag is a rectangle with different kind of angle. So it is like um, uh, rectangle a little bit on the side. So we see this continuation here, and another sellers coming in. We see acceleration. After this accelerating point, we got another one. And the point is, when you feel like the real sellers came into the market and the trend is changing and there is a situation where you can take 50, 100 pips, well, first thing you could do is take double action. I mean, buy two parts of the contracts. I mean, split the position into two different prices while buying, or just buy two contracts that represent two parts of the buy side. So I'm not saying you're buying only two contracts. I'm saying you're buying, if you're normally regular buying 50 contracts, for example, you're doing it, you see it as the 25 and 25. So based on the move, for example, when you're not sure what the market is doing, you can sell, for example, I mean, buy those contracts back. I mean, take the profit, differently saying, take the profit from the half of the position of 50 contracts, and take the profit from 25 contracts, for example, in this moment right here, when you feel confused, when you see the market made already a bigger move of 130 pips, and you think that's pretty much it, or you feel uncomfortable with this short position, you don't feel like market is going down much longer at this point, take a half of this position with profit. So you left with just one contract. As I mentioned, we discussed it at the example of two contracts, just two to make it easy. You're left with one contract, and what do you do with this contract? Well, you've took some profit, it's comfortable to leave it running. You see the trend is going down here, so we're not really sure. Let's take a look at 4 hour chart. We are not really sure. So at this moment, I really don't know if the market's gonna move here another stop pips, 100 pips lower, or the market's gonna move 180 pips, or even maybe much lower, as the bigger downtrend may just occur, came into the market, and the more sellers will be coming more in the future. So what you want to do is, if you are going with the trend, and this is the trend in this direct moment, or you were feeling like you're going long somewhere here at those positions, uh, keep those contracts running. I mean, if you enter here long, keep it for a while. You can take like half of your position with profit right here, but let it run for a while. Leave your stop loss at break-even point and see what's gonna happen. Take some more profit from the market if you're going with the trend. Leave it to the moment when the upside is gonna be lost with some sellers coming in, you see. So the worst you could do, when leave it running, I mean when you bought contract here, you would take the profit, let's say at this point when the sellers came in, or you took the profit stop at this point, for example, which you see is exactly just above this profit if you took it perfect the same or other day after entering the market. So, but coming back to this example, leave it running for a while. It might be coming back, like for example, this price action might be coming back reverse to this point of 27.88, but it could be the moment that the market again will show you the downtrend is really winning right now, and the market's gonna break again through the downside. So leave it running. You might be taking another 100, 200, maybe 300 pips. Leave it to the moment when you feel when you're feeling like the trend is changing, like the buyers are coming into the market again. So it could be like here, or it could be some other moment at the market. It depends on the current price action. You see, right now we are having some green candles, but for somebody who took the trades, let's say here, just below this support resistance line, it is not something scary, especially if you took already some of the profit. So it is not a scary transaction to leave it. So it is not the scariest transaction to leave it at this point running, because the market had to be shooting very significantly above this side of the support resistance to make you feel uncomfortable, or you just leave it at break-even point, the stop loss, I mean, to leave it just to see what's gonna happen, and the market can close your position, or if it's not gonna be so high, it's not gonna go so high, it will probably go down, and you're with the trend. So you're always winning with the trend, especially when you're leaving the transaction. In most videos, I will be also showing the parts when you take the profit from the transaction, when this point, when the buyer's coming in for a while, for short enough time to finish your stop loss, to execute your stop loss, that it is more serious thing to do, to come out from this transaction. I mean, take profit, like for example this moment. We could take profit right now from this transaction, or when we came to the market here or here, we could take profit here, but it's really not so big profit. So we're waiting for something better to come up, especially we're doing with the trend right now. That's the trend definition. That's the let it run strategy. Part of the strategy, when you're with the trend, you leave the part of the position to let it run to make more profit based on the price action and trend. Thank you very much for listening. I hope you hear some more about let it run in future videos. So it will be very much useful. Thank you very much.